The S&P 500, Nasdaq, Dow Jones, and Russell have entered a pullback zone, an inflection point that could either extend the weakness or reignite the long-term rally. In this weekly market digest, we explore how global markets, Amazon, and Microsoft are lining up for the weeks ahead. We'll dive into the momentum shifts and what to watch next. And today, we start our journey with the Dow Jones. This is the weekly closure, and also we can see a monthly candle here. If we look at the monthly formation, most likely it is bullish, somewhat closer to neutral. However, at this point, we are not seeing any concerns regarding the bigger pullback. If we look at the weekly, well, we have a fairly strong bearish engulfing, which moved and closed below the important support line, 8 weeks EMA. Well, at this point, it is difficult to say that after this big rally, we need to see a strong confirmation of the move on the weekly. On the daily frame, obviously everything is bearish here and the chances for lower lows are fairly significant. However, I'd like to emphasize that Dow Jones went into an oversold territory and we might see a pullback or even a strong bounce higher at the beginning of next week. So the beginning of next week will be very important for building momentum and confirming the initial move on the weekly frame. If we look at the Elliott wave charts, everything is fairly simple here. This is the chart that we shared on June 15th, and so far I cannot say that Dow Jones is not following it. It most likely completed wave 3 of a bigger impulse, and now it is forming wave 4. If we look at the most typical pullback levels based on Fibonacci levels, I would say that this is the minimum target here and it's already been hit. So the Dow Jones can move a little lower here. However, the minimum is already done and we might see a consolidation and a pullback higher. So that's the perspective for Dow Jones, and if you're interested in the long-term and short-term perspectives, I posted them earlier on our website, and we also have the long-term perspective and the chart there outlining the chances and the targets for the move. Now let's have a look at Russell. Russell is very similar to Dow Jones, and if we look at the monthly frame, monthly closed with a bullish continuation candle. However, the upper shadow is fairly high, and I think that it refers to a potential pullback at the beginning of the month. This is what we are seeing right now. So now we need to have a look and see what where Russell finds support and what would be the next move. Similarly to Dow Jones, the weekly is a bearish engulfing, and it managed to pierce through the 50 weeks moving average. However, still getting support at the 20 weeks. Let's see what happens in the next week, whether there is a confirmation for this weekly move. On the daily frame, also the candle is somewhat dangerous. It is right now sitting right at the 250 days moving averages. If it moves lower here, then this potential cross 50 over 200 could be averted, and we might see a different direction for the index. But aside from the daily frame, all frames for now are looking bullish, and we need to see a much bigger momentum for the index to change the direction. If we look at the midterm frame, so this is the chart that we discussed way back in June, and since then Russell advanced and it hit our target area, and right now it is moving downward. So at this point I have two potential counts on my table, and one of them is the green one, wave 1, 2, 3, 4, 5 for the wave 1, and if we see a bigger correction here, I would be looking for wave 2 somewhere in this area, somewhere between 2000 and 1940. However, there is also an alternative count. This could be potentially wave 1 and 2, and this is just wave 1 of a bigger wave 3. In this case, this purple rectangle is the target for this pullback, and if Russell finds support here and breaks and reverses its path, then we would be looking for wave 3, which would be quite a rally for October and for August and September. Now, if we look at the short-term frame, this is the current pullback. This is the top here on July 23rd. The first wave is corrective, and it's not an impulse here, and it's not a diagonal, because for one very simple reason, the middle part is the shortest wave in the sequence, so it breaks the rule of Elliott waves for being an impulse. Oh, I'm looking for an A, B, C correction here. So wave B possibly is forming an impulse. Wave C is possibly forming an impulse here, which would be targeted somewhere here between 21.33, 21.13. That's then approximate target for now, and based on the pace of the current decline, I would be expecting it to be hit in the next couple of days. If we see a strong reversal, then this correction is likely over. Now let's talk about Nasdaq. So Nasdaq has a slightly different story. So first of all, the daily is strongly bearish right now, and with the high chances to continue further down. The question is, what would be the next candle? Whether it's going to be a big red one, which would make it a bearish 3 black crows, or it could be something different, which might hint about a possible reversal. On the weekly frame, we have a bearish engulfing. However, the candle still sits above all major support lines, and we need to see a much stronger move down in order to make change here. The monthly closed with a typical bearish bullish continuation candle, and at this point it's too early to say what will happen at the end of August. Now let's have a look at the charts. So this is the chart that we've been tracking for a while for Nasdaq. This is the latest version of it in June 28. Since then, Nasdaq advanced, and now I'm looking for a corrective move, potentially for wave 4. So these the red and green rectangles are the two most typical areas for a retrace for wave 4. And by the way, this wave could be extended. It could be like a bigger flat or a triangle, but let's not add this complexity for now. Let's see what happens and what kind of wave it will be for the first wave down. And if we look at the wave itself, this is a 30-minute chart. what I'm seeing is a potential impulse, a wave 1, 2, 3, and 4. If this impulse completes here, I would be looking for a bigger correction, potentially wave A, B, and C, as I mentioned, for a possible flat. And just to give you the visuals, so this is a possible for wave. Change the color. This is the possible formation if we consider this as an impulse. However, this also could be the end of the formation if we see it as a very sharp zigzag, let's say wave A, B, C, and then completion of the entire correction. So far, the next wave in this case will be crucial, and we would need to understand its character, whether it's going to be an impulsive or corrective, so that we can make another call and judgment about the perspectives for Nasdaq. And now this is another example of our forecasting. This chart was shared with our members on July 16, and so far we can see that Nasdaq very decently followed the chart, made wave 1, 2, 3, 4, and 5, and since that call it made over 3% up, and then it moved down so far. Well, so let's see what kind of wave it completes downward, where it ends, and what would be the wave upward. So there are still a couple of options on the table. Now let's have a look at S&P 500, and we also start with candles. Candles are fairly similar to what Nasdaq had. The monthly closed with a fairly solid bullish continuation candle. Now we are seeing a bearish engulfing for the weekly. However, it needs a much stronger technical support and a continuation for the next week in order to confirm the move. The daily is bearish right now, and I would like to say that it is grossly oversold right now, so we might be looking for a bounce, potentially closing this gap here, but it's still unclear. So then Monday, Tuesday would be very crucial for the development of bearish momentum. Now let's have a look at the chart. So this is a very interesting chart. So it started actually in April 22nd, when we said that this bottom is likely done, and we were projecting S&P 500 to move towards 5,900, 5,700 area. But the wave transformed during the run, and we moved the targets much higher. So these were the latest targets for the wave as of July 7th, and since then this is what happened. We can see that S&P 500 futures moved toward this area and found resistance, and this is the chart, the latest that we shared on July 31st, saying that these would be the targets, most typical targets based on different techniques, different technical analytics. So we are looking for a pullback toward these targets into if S&P 500 keeps this channel, then the next wave we will be looking for wave 5 towards 68, 6,900. Now let's have a look at the short-term frame. This is possible. This is one of the possible counts, and I'm not quite confident about it because the waves are overlapping. They could be leading diagonals here, and another one that's like ending or leading diagonal for a bigger impulse. So this, in any case, so this chart requires more data and more analytics. So I hope that the next wave upward would give us a lot of chances, a lot of solid data that we can use for the next forecast. And now that's all for S&P 500. And once we are here, I'd like to have a look at the monthly closure of the global indices and what the candles are telling us. So let's start with Shanghai. So far, we are seeing a strong bullish move, strong bullish candle, continuation candle. There is no concerns at this point. While we can see a pullback at the beginning of the month, the odds are bullish on the long term. I cannot say the same for the Hang Seng index. It's while it is also bullish, it's not as bullish as the Shanghai one, so it's more closer to the neutral. However, I'd like to say that this candle, the monthly candle, closed above the 100 months moving average, and it is a very solid sign by itself. Nifty. Nifty is very vulnerable at this moment. It closed the month with a dark cloud cover, and right now it is moving down. If it closes in August with a confirmation, then we might be looking for a very concerning path, and this would be like a bigger corrective action, like an ABC. I think if you watched our latest video on Nifty, it refers to the red path, red alternative path that you can find on the long-term chart. So let's keep it in mind, and we will return to it at the end of August to see whether our prediction is followed. Japan, Nikkei. In general, this candle is soft bearish because it failed to close above the previous month's high, and I would be looking for a pullback, maybe for a multi-month pullback, or at least a pause for Nikkei before it resumes its rally upward. So be careful here. From Australia, UK, and Canada, they closed with fairly solid bullish continuation candles, and I'm not seeing any concerns, any potential reversal until up until now. So let's see how these indices, ASX, FTSE, and TSX develop in the next couple of weeks. But at this point, the long term is bullish. German index DAX. So we are. This was another consolidation candle, and now German index has a chance to form a bearish reversal, potentially a bearish tower top. However, we need to wait for another month to see if this happens. So far, this index is somewhat neutral, slightly bullish. Let's see what happens in the next months in August. That's all for global picture. As you can see, the majority of indices are looking upward, and while we still can see indices like German and Japanese having some bearish attempts, they are far from being a very strong bearish reversal. So we would be looking for, but we will be cautious about that. So that's all for the indices, and now let's talk about big and serious companies. So Amazon. Let's start with the monthly closure. The monthly closure was fairly strong and clean 3 white soldiers. On the monthly frame, it means a strong move higher. We can see a pullback here, but as long as these candles and they stay above the support lines, I wouldn't see any concerns here. And even if we see the pullback on the weekly frame, on the 15-day frame, so the monthly is still the primary driver of this rally. A big and sharp move on the daily, it still needs to be confirmed, and the same thing about weekly, because this candle could be a strike 3 rather than bearish engulfing, depending on its confirmation. Again, the very critical and pivotal next week. If we look at Amazon chart, this is the one that we shared earlier in June. So far, I'm seeing that Amazon possibly completed wave 1 of a bigger wave 3, and now it is working on wave 2. Ideally, if it finds support somewhere between 210 and 190, as I'm speaking, it is right now 214. Well, we can consider this wave a very sharp wave 2 done, and the rally towards towards this target, which is somewhere between 300 and 310, would start. Well, that's the chart remains the same, no changes here, and I am looking for the completion of this wave 2. Now let's talk about Microsoft. Microsoft is having very interesting set of candles. First of all, I'd like to say that the weekly candle sequence is somewhat concerning. We have way too many green candles in a row, and most likely we would be looking for a pullback, and it could be fairly significant. And if you look at the daily frame, we have a red candle outside of Bollinger Bands, strong momentum. I think that this is going to lose another like 40-50 points and maybe find support at the blue line, 50 days moving average. So that's the ballpark assessment right now. But now let's have a look at the charts. So this is the long-term one, something that we discussed way back at the beginning of June. And this is how it looked at the beginning of June when Microsoft was 470. We said that this was be the potential rally here for wave 1. I think that this is the same chart, no changes here. We can see that Microsoft hit this hit the long-term channel, upper channel, and right now we would be looking for wave 2. Once it's complete, wave 3 and possibly even higher, depending on how it pulls back. I would be willing to extend wave 3 up to here, maybe even higher. So, but let's keep it at this level so far. This is an interesting chart. This is the short term one, 12-hour chart, as we left it on June 4th. So this is the chart, original one, at 464, and since then Microsoft added 20%, and if you were lucky enough to sell it at the beginning of the day on July 31st, you would have made about 20%. So now let's change the date and see whether we need to do any adjustments here. At this point, I'm not seeing anything that would alter the chart So this wave 3 most likely here, and wave 4 would be either a sharp reversal or maybe a bigger flat, and then wave 5 would go somewhere there. So we are not changing anything. This is our perspective on the short term, and the long term also no changes. As you can see, Microsoft and Amazon are both vulnerable for the short-term pullback. They would be looking for a decline, potentially 10-15%, but after that, I'm expecting them to reverse and resume the rally. Well, that's all for the stocks, and now I would like to talk about our swing room. If you watched our videos and follow our daily updates, our swing room went long on SPY on July 16th. Tier 2 members exited on July 31st, banking approximately a 6.6 gain, about 400 points, while basic members closed later that day with about 5.6%. The current position will be revealed to non-members after Monday's close. And for more information, open information and trade insights, visit our website, where we today posted more information on this latest trade, how it was administered, and also its alignment with some Elliott waves, which is a different service on our website. And now let's wrap things up. As the dust settles after the July monthly closure, the long-term bullish structure of most global indices remains intact. US indices are broadly aligned on a path higher, but near-term weakness continues to weigh on price action. If the bearish momentum builds next week, more losses could follow, and if it fades, we may see the rally resume. Microsoft and Amazon share a bullish long-term structure, though their short-term path may differ. One may pause, another may push. These divergences make short-term positioning even more critical. For those interested in deeper market context, don't miss the strategy and commodities digests posted earlier this weekend. Member-only content packed with forward-looking setups and sector-level breakdowns. Full long-term wave charts and in-depth analysis are available in the weekly and monthly reports on our website. Like, share, and subscribe, because we chart the charts before the crowd even blinks. This is Investing Angles.